Hello everyone. As I told you in the previous video that I will be coming back with a full-fledged question in which we'll be required to prepare a profit and loss appropriation account and the partner's capital account. So here I am with a question written on the board. Read along with me. There are two partners, Shiv and Hari. They commenced partnership on April 1st, 2017. Their capitals were 5 lakh and 2 lakh rupees, and there's an information that Hari introduced additional capital on July 1st, 2017. That means Shiv has not introduced any additional capital, only Hari has introduced additional capital. Their profit sharing ratio is 3:2. Salary for which the partners are entitled according to the question is 5,000 per quarter. Interest on capital will be provided at the rate of 8% per annum, and interest on drawings will be charged at the rate of 10% per annum. The drawings of the partners are 12,000 and 10,000 respectively, and the profit of the firm as at March 31st, 2018 before any adjustments is rupees 1,96,000. See, I'll explain this in a line that profit before adjustments means that nothing has been given out of this profit. This is the net profit which they have ascertained by preparing the profit and loss account. And out of this question, we have to prepare a profit and loss appropriation account and a partner's capital account. See, before we go on to prepare the profit and loss appropriation account, we'll be calculating interest on capitals of the partners and also interest on drawings of the partners. So, we calculate the interest on capitals of the partners. First of all, Shiv's interest on capital will be calculated on 5 lakh rupees at the rate of 8% for full year, and that means his interest on capital is 40,000. Hari's interest on capital will be calculated as 2 lakhs into 8% for 3 months. Why 3 months? Because Hari introduced 2 lakh rupees in the beginning of the year, and then he introduced further capital on July 1st, 2017. Therefore, for the first 3 months, his capital was 2 lakh rupees. His capital in the business for the months of April, May and June, that means 3 months, was 2 lakh rupees. Therefore, we are first of all calculating for 3 months, and this amount would be 4,000 rupees. After that, he introduced 1 lakh more, and then his total capital on 1st July became 3 lakhs. Therefore, now we calculate 8% on 3 lakhs for the remaining part of the year, that is 9 months, and this amounts to 18,000 rupees. Therefore, total interest on capital for Hari is 22,000 and interest on capital for Shiv is 40,000. Okay, so now we move on to calculation of interest on drawings, and the same has to be done in this way. Shiv's interest on drawings equals to 12,000, which happens to be his drawings, and the rate of interest on drawings is 10% per annum. Therefore, you calculate 10% on this, and then we go on to calculate it for 6 months. See children, this is important. This calculation for 6 months on interest on drawings is done because the dates of drawings are not given. And this applies only for the calculation of interest on drawings. This does not apply to the calculation of interest on capital. When dates of drawings are not given in a question, you will be calculating for an average period of 6 months. And this way, his interest on drawings would be 600 rupees. And Hari's interest on drawings similarly would be 10% on 10,000 rupees again for 6 months. So his interest on drawings would be 500 rupees. Therefore, we have interest on drawings of the partners also. Interest on capital we had already calculated, interest on drawings we have now done, and the other thing which we need to show in the profit and loss appropriation account, children, is the salary of the partners. Both the partners are entitled to get equal salary, and that is 5,000 per quarter. 5,000 per quarter amounts to a total salary of rupees 20,000 for the year. Therefore, the salaries are also there. So we are ready to go for the preparation of profit and loss appropriation account. I'll actually draw a format of profit and loss appropriation account here, and then we'll continue by the preparation. So children, here's the format of the profit and loss appropriation account. See, I've noted down the interest on capitals here for Shiv and Hari, interest on drawings for Shiv and Hari, and salary of both the partners, and the profit of the firm, which is 1,96,000. Okay, now as I told you while explaining the format of the profit and loss appropriation account, that we always start from here. We write the net profit given in the question here first of all. Okay, then on the credit side there's only one thing which we write always, and that is interest on drawings, and which we write like this. For Shiv it is 600, for Hari it is 500. The total we'll be writing outside, and that is 1100. Then we come to the debit side. Children, you remember what we write on the debit side? We write things like interest on capital, salary, commission, or when the partners have to create a reserve, we write there. Or sometimes even if the partners want to donate some amount to an outside organization, they have to make that entry here. But in this question, we have only interest on capital and salary to be written on the debit side. Therefore, we start with to interest on capital. And interest on capitals, because we have already calculated, for Shiv the interest on capital is 40,000, and for Hari it is 22,000, and we move the total outside. 62,000 is the total. The next thing is the salary to be given to the partners, and the salaries of the partners are, as you know, Shiv and Hari both are supposed to get equal salaries, and therefore we write 20,000 each. 40,000 salary to the partners. Now we have written everything in the profit and loss appropriation account, and we close this account. Obviously everybody knows, all of you know this, that we close the account by making a total of the account, and the total is 1,97,100. And then we subtract the amounts given on the debit side and ascertain the profit, which is distributable amongst the partners. So the profit here, after subtracting this, you see 62,000 and 42,000 makes a total of 1,02,000, and the amount of profit which we are going to get here is 95,100. This 95,100 is the distributable profit amongst the partners. This has to be distributed according to the profit sharing ratio, like this. You'll be writing it here that the profit is transferred to Shiv's capital account and Hari's capital account. Now, how do you calculate the profit? In the question, it was given that the profit sharing ratio of the partners is 3:2. See children, most of you must be knowing how to divide an amount through a ratio, but still I am explaining that suppose we have to distribute this amount 95,200, how do we do this with the ratio? See, 3 and 2 are the ratio, and 3 plus 2 is 5. Therefore, the ratio goes like this, 3 upon 5 and 2 upon 5. So, for calculating 3 upon 5 and 2 upon 5, we just have to do like this. And the amounts will be calculating like this. So the amounts are 57,060 and 38,040. The profits which each of the partners are going to get is 57,060 and 38,040. And we have to write this amount here. 57,060 and 38,040. And the total obviously is 95,100. Okay children, so I hope you have understood how we prepare the profit and loss appropriation account and how we distribute the profits amongst the partners. Now we'll go on to prepare the partners' capital accounts. I'll draw the format for the partners' capital account and then I'll show you how to make entries in that. So children, this is the partners' capital account, and as I have told you earlier that if it is not mentioned in the question that you have to make a fluctuating capital account or a fixed capital account, you will be making a fluctuating capital account. Now why do we call it a fluctuating capital account? Because we start off with an opening balance and then we find a closing balance. The opening and the closing balances are different because we make a number of entries in this account and obviously the amounts are going to change, and because the balances fluctuate, we call it a fluctuating capital account. So children, in this question we are starting with by balance brought down. Whenever you prepare a capital account, you will be starting from here. This is the opening balance of capitals of the partners. Now the opening balances for capitals here were 5 lakh for Shiv and 2 lakh for Hari. According to the question, Hari afterwards introduced additional capital. This is an entry for introducing additional capital. Hari introduced 1 lakh as additional capital. Okay. After that comes interest on capital. Interest on capital we have calculated and already written in the profit and loss appropriation account, and that interest on capital was 40,000 for Shiv and 22,000 for Hari. Salaries of the partners were 20,000 and 20,000 for the other partner too. Then we distributed the profits in the profit and loss appropriation account. We put the distributed profit here and the amount of that profit was 57,060 and 38,040. So these are the items which we have written on the credit side of the partners capital account. See children, in simple words, I want to tell you that on the credit side you write those amounts which the partners are getting. That means they are receiving, like interest on capitals the partners are getting, salary the partners are getting, the profits which they have distributed they'll be getting. That means all these amounts will be actually contributing towards the increase of their capitals. Okay, now on the debit side we write drawings and interest on drawings. The drawings of the partners were 12,000 and 10,000, and the interest on drawings was 600 and 500. Therefore children, you see on the debit side we write those items which are going to reduce the capitals of the partners. Drawings are going to reduce, obviously we know that drawings are subtracted out of capital, and interest on drawings will also reduce the capital, and therefore we have written on the debit side. Okay, now finally we come to the end of this account as well, and we make the totals of this account, and the totals would be, okay children, so the totals of the partners capital account are 6,17,060 for Shiv, and for Hari it is 3,80,040. And then we go on to calculate the balances of capitals. Their balances are these amounts: 6,04,440 and 3,69,540. I hope everybody knows how to calculate the balances. Such a basic thing we have already done in class 11. Therefore children, I think I've made it clear to you all that how to prepare a profit and loss appropriation account, and then how to prepare a partner's capital account. This partner's capital account, as I told you, is a fluctuating partner's capital account. See, the opening balance of Shiv is 5 lakh and for Hari it is 2 lakh rupees, and the closing balances are 6,04,440 and 3,69,540. So obviously the balances have fluctuated, and therefore this account is called a fluctuating capital account. See children, if in the same question, if you are told to prepare a fixed capital account, I'll tell you how to prepare that fixed capital account. See what happens when you have to prepare a fixed capital account. You'll be making a capital account of the partners and another account, that is current account of the partners. Therefore, listen to this carefully and try to understand. When you are told to prepare a fixed capital account, you will automatically have to prepare two accounts. The first account obviously will be the capital accounts of the partners, and then the current accounts of the partners. Is that clear? I'll show you how to prepare the capital accounts and the current accounts of the partners. But let me tell you what is the difference between the fluctuating capital account and the fixed capital account. See what happens. This fluctuating capital account is actually split into two parts. That means the opening balances of capital and capital introduced, or in case capital withdrawn is also there in the question. That means opening balance of capital, capital introduced, or capital withdrawn. These are the only things which we take to the capital account, and rest of all the entries like interest on capital, salary, profit and loss appropriation account, drawings or interest on drawings, all these entries will go to the current account. Therefore, it is kind of splitting the fluctuating capital account into two parts, in which entries related to capitals go to the capital accounts and other remaining entries go to the current account. Here students, I have drawn the format of the partner's capital account and the current account, and I am again repeating that whenever you are asked to prepare a fixed capital account in a question, you will be making two different accounts. The first one is partner's capital account and the other one is partner's current account. So in the partner's capital account, we write the opening balances of capitals of the partners. We all know it is given in the question that the opening capitals are 5 lakh and 2 lakh, and then Hari has introduced an additional capital of 1 lakh during the year. So this is an entry for introducing additional capital. If some partner withdraws excess capital, we'll be writing here as to cash. But in this question, nobody has withdrawn any excess capital. Yesterday I told you withdrawing of excess capital is called as drawings against capital. That is not happening in this question. So for this question, we write the opening balances as by balance pro down, and the additional capital introduced by Hari is written as by cash. Okay, that is the only thing we have to do in this account. So children, I am repeating what I had said. When you are preparing a fixed capital account, you will be making entries related only to capital in the capital account, and then simply write down the balances. Okay. all the remaining entries which we had done in the fluctuating capital account will now come here, starting from buy balance brought down and buy interest on capital. See, this buy balance brought down is not required in this question, but it will be required in some other questions further in the chapter. This is written only if the opening balances of current account is given in the question. In our question, we don't have opening balances of current accounts given, so we don't need to write this buy balance brought down. This I am showing to you only because when you will be having current account balances given in the question, you will be starting like this. In this particular question, we'll be starting from here itself, buy interest on capital, and the interest on capitals of the partners were 40,000 and 22,000. Then by salary of both the partners was 20,000 each. We had distributed profits, and the amounts of profits distributed were 57,060 for Shiv and 38,040 for Hari. On the debit side, we had two drawings, and the amount of drawings was 12,000 and 10,000. Another thing on the debit side was interest on drawings with an amount of 600 and 500. So children, what we have basically done is we have split the fluctuating capital account into two parts. The entries related to capital have gone to this account, partners capital account, and the remaining entries have all been entered in the partners current account. Now obviously you will make the totals of these columns and calculate a balance, and these balances will be the closing balances of capital accounts. Okay, now further, which is not in this chapter, in the further chapters of the same unit, when the partners will have to prepare their balance sheet, they will be writing these capitals in the balance sheet and also the current account balances in the balance sheet. Okay children, so I've made this clear to you all, how to prepare a profit and loss appropriation account and how to prepare a fluctuating capital account. Apart from that, I've also told you that if it is required to make a fixed capital account in a question, you'll be making two accounts. The first account will be partners capital account and the other one will be partners current account. One point worth remembering is that capital introduced will be written here and capital withdrawn, that means excess capital withdrawn, will be written here. We do not have this in this question. In some other questions, if we have capital withdrawn, we'll be writing it here on the debit side. In this question, we do not have this. Drawings and interest on drawings will never be written in the capital account if the capital accounts are fixed. Okay, so children, there can be a lot of 1-mark questions from what I've explained today. Those questions could be like, what are the items written in a fixed capital account? The answer would be that you write opening balances of capitals of the partners, capital introduced by the partners, or capital withdrawn by the partners. Okay. Another question can be a random question like, where do you write drawings when a fixed capital account is prepared? The answer is drawings or interest on drawings will be always written in the current account if a fixed capital account is prepared. Interest on capital, salary, or this distributable profit will never go to the capital account if the capital accounts are fixed. They will always come to the current account. So children, I am finishing this class for today right here, and I'll be continuing with the further topics in the next video. Thank you so much, class.